22 or 23 at the time. And I remember Rich, his name is Rich, and he was standing there and he was like, well, good job. I'm going to build this house. We'll make some money now. He goes, well, what do you think I should pay you? And I'm like, $500. It still takes a lot of time and headache, and you have to sift through a ton of crap to get to the properties that are worth offering on, but you can get great deals.
Yeah, you're still in your 20s. I think you should be less hard on yourself. All right, Dan, welcome to the Modern Land Investor Podcast. Thanks for jumping on and joining Michael and I.
Yeah, I'm excited, Chris. Thanks for having me. You and Michael. It's good to actually meet you, Michael. I'm excited to talk about some land.
Heck yeah.
Yeah.
We appreciate you coming on. This is going to be good.
Good
Yeah,
stuff.
absolutely.
So little backstory, just for folks that are listening. Dan and I spend most of our time when we meet in the water, out surfing out front down here in San Diego. Huh, Dan?
Yeah, that's the best way to talk about land is in the mountains or on the water. That's the way I prefer to do it. And so learned a lot about surfing from you.
I don't know about that. Maybe the stuff not to do. So you can use me as a cautionary tale out there. But thank you. Anyway, so let's start to dive in a little bit on your history. We can talk about deals all day long and some of that stuff, but I'd love to start with kind of your superhero origin story. Like where are you from? Where'd you grow up? And how did you find your way into just entrepreneurship in general?
Yeah, well, I grew up in Ohio in a rural town about an hour outside of Cleveland, and started working pretty young. Kind of managed a farm when I was in high school, and along with the farm, every individual location this guy had a house on it, and he rented them out. So he had like 6 or 7 rental properties, and then a few in the little town of Medina as well. And so he would spend a lot of his year in Aruba because he was kind of quasi-retired, and I had to manage his rentals when he was gone. And it wasn't like I'm collecting rent; all of that was automated. But if there was a problem, I was the one that had to go fix it and or find a vendor to fix it if I couldn't do it myself. And so that was my first experience with real estate. Had no idea that it would be something that I would do. Definitely didn't make me want to get into real estate because he was not a great landlord in hindsight. He could be a bit vindictive, and I saw that. And he had some nasty fights with his tenants. And I was a baby-faced 16-year-old, so they were all pretty nice to me. But I saw just the conflict between them, and so in hindsight, learned how not to manage rental properties. So that's definitely served me now. And so I did that for a number of years, and then I had my own little landscaping business with a friend when we were 17, 18, going door to door, getting clients and doing landscaping, and ended up leaving that farm for a while. And I worked full time through my last couple of years of college. And when I was doing that, that was the time where I really decided I need to start some sort of business of my own because I'd get to work at 6:45 in the morning. I'd be done at 5 or 6, and I was doing full-time school. And now most of it was online. I had to do some classes in person at night, but most of it was online. And so Saturday and Sunday, that was all I did. I had absolutely no life my last couple of years of school. And so, this is when I'm 20, 21, and going through that, I thought, okay, this is really frustrating. I see all my friends having fun and doing the things that college kids do, but I at least had some little bit of self-awareness where I knew, okay, I've been managing people for like 5 or 6 years. I've run small businesses. I'm managing gross margins on projects at this landscaping company, etc. I can start some sort of a business. I knew that my skill set was a little bit ahead, and then at the same time, because I was working, I paid for school myself, had no debt, and had a middle class salary, and I was in Ohio, which is really cheap. So read a bunch of different books on different types of business and investing, and Rich Dad Poor Dad, like pretty much everybody else, was the thing that leaned me towards real estate. And so shortly after that, I bought a duplex and house hacked it. And I'm 21 at the time. I knew I didn't want to stay in Ohio, so I figured whenever I leave, I'll just rent out the side that I'm living in. Ended up moving to Colorado, bought another house as a house hack, rented all the rooms while I lived in it, kept the duplex in Ohio. And then I quickly found that the whole low and no money down thing is great for selling books and courses, but it's not actual reality for buying rental properties. right? And so that in that time, I was listening to a lot of Bigger Pockets, and I listened to Grant Cardone, Rod Cleef, and they're all talking about accruing these huge portfolios of units. And me being kind of naive, I didn't understand that they have these huge education businesses, and that's really where they make their money, right? But anyways, that aside, I'm two properties in. I'm living in Colorado. I still had a job because I just got a job when I was in Colorado, and this is 2018, and then into early 2019. And at a local real estate group in 2018, I met a guy who'd been in land and development since the 70s. And he lived an hour south. I was in Colorado Springs. He was down in this little town called Pueblo West, which is a weird little place if you've ever been there. And I'd go down there every weekend to help him in his business to learn from him. And he was building homes in Pueblo West on infill lots. And so that's how I first got involved in land. And it started with kind of two things. Number one, I would go and get lots for him and his contractor to build the next projects on. And then number two, I remember when I first got down there, I'd been down a few times. We started to have a bit of rapport. He was kind of like starting to become a mentor. And we went to one of his spec homes. And he goes, "This hasn't sold." And on the table in the spec home were a whole bunch of business cards from realtors that had toured their clients through, but they didn't buy. And so he told me, call through all of those, ask them what their opinion of the home was and why they didn't buy, or what their client's opinion was. And one of those people that I spoke to liked the home and just didn't like the lot. And the listing agent didn't take the time to do this, but I did. Long story short, I got and put together a pre-sale on another one of his lots for the same home, but on a different parcel. And so that was like my first actual involvement in a deal. And this was, I think, late 2018, maybe early 2019. I'm not sure exactly when that was. And I'll never forget something. So I'm like 22 or no, 20, 22 or 23 at the time. And I remember Rich, his name's Rich, and he was standing there and he was like, "Well, good job. I'm going to build this house. We'll make some money now." He goes, "Well, what do you think I should pay you?" And I'm like, 500 bucks. He's like, "Are you okay with that?" And I go, "Yeah." And he shook my hand and he just laughs. He goes, "I would have paid so much more than that." so, so that's a lesson I will never forget. But anyway, so that was, 2018 or early 2019. Started wholesaling a few lots, getting them for him and his friends. Some other builders in town needed lots, and so I'd make little bits of money there. And then at the same time, I was helping put together some of these builds, and so I was getting to watch the process and learn how new homes are built, at least simple spec homes. And it's very, very simple once you break it down into its component parts. And so ultimately, that's where Front Range Land came from. So I started my own entity, started marketing a lot direct to seller, buying and selling lots. And that became the vehicle for making money to then put into more rental properties over the years. I mean, I love rental properties. If you do it properly, it can be somewhat passive. It's not purely passive, but nice properties in nice areas get nice tenants, and those tenants can be not much of a headache. So I've continued to buy more rentals slowly and steadily in the last, what now, 8 years. And yeah, I still have that original Colorado house hack. It's still a great property. And now doing a lot more within the land and development space under Front Range Land.
So you, let me make sure I understand this. You were starting to foray into, you were out hunting properties after that first deal, and
Mm-hmm.
then you were wholesaling them to the guy Rich, your mentor, and then some other local builders.
Yeah, those were my first few deals, and then I marketed down in Colorado City, which you're probably familiar with. A lot of the land geek people, and so a lot of those little baby lots, I'd buy something for $200 and sell it for 1,500 or whatever when I was first getting started.
Yeah. So how'd you figure out the whole wholesale thing where you were going to, buy a property for X and then sell it for X? Were you doing assignments, or, the contractual nature of it is probably a little bit confusing if you don't know what you're doing. And I know there's a lot of stuff online, but like, how did you put those pieces together?
It was twofold. So the concepts, I got a lot of the concepts from Rich, who I mentioned. But some of the more tactical stuff I got from guys at the real estate group that I had met him at. The hosts were doing a lot of this, and so I got a lot of information from them, and actually paid one of them for his contracts and systems and CRM and all that. So that kind of gave me the mechanical side of it.
Nice. Nice. Okay. Yeah. Because that stuff it just sounds like you're creating money out of thin air with these contracts, and you've
Yeah.
got to dial in the moving pieces. And I always look at wholesaling like if you're going to do a double close, it's like walking this tightrope, and
Yeah.
between the seller and the end buyer, and you're sort of this middleman, and there's
Hmm.
all these landmines on both sides that could go wrong, and screw up the deal. But the good thing is you knew that area pretty well, I'm sure by that point, Pueblo West, right?
Hmm. Yeah, I think I know every street. I think you can give me any address and I'll tell you what it's zoned, what it looks like, and where it is. But yeah, that definitely helped. And then as I got into what were at the time bigger deals for me, I had him fund some. I got family and friends to fund some once they saw me be successful for a while, and so slowly moved my way up in price point.
And I think it's pretty cool too how correct me if I'm wrong, but it sounded like, especially in this Pueblo West subdivision, you were targeting other builders, right? So it wasn't
Mhm.
necessarily direct to consumer, where I think a lot of people in the land business kind of focus is buying these lots that they can just sell directly to consumer, but you had developed the network of the end buyer at the beginning of it so that you knew exactly what their buy box was. And that took a little bit of the risk out of it on you wholesaling the deal, because a lot of that, is the landmines that Chris was mentioning that you got to navigate, knowing that they're going to be able to execute and do what they said they were going to do. And having that relationship is so critical.
Yep, 100%. And many of them, I didn't necessarily wholesale, but I had identified, and the buyer was ready to go, shortly before we were closing to buy it, and that took a lot of the risk out of it. But 2019 was still pretty slow. But then once we got into the pandemic era, then it was just ridiculous, and everything just sold quickly, and there was buyers for everything. So then that got quite easy, and we started just listing a lot more on the market to get the highest offer possible.
So you rode that wave. So it's interesting then to hear about your kind of segue over into Colorado City and doing some of those smaller deals. And can you just talk about your experience and how you moved over there, and then how long have you kind of stayed in that little niche or that kind of class of properties, and where you've gone from there?
Sure. So it's in the same county as Pueblo West, and I saw another infill subdivision just like Pueblo West with price points that at the time I could use my own money to buy, and so that was exciting. And so that was really at the beginning. I think I had some of those left into early 2021, but I didn't really do any of that after that point. It was all more in Pueblo West for a while there. And then early 20, well, not only Pueblo West, there are other parts of Colorado, but primarily Pueblo West, because there was a while that those lots were just selling like crazy. And there are many, many, many thousands of them. It's a huge subdivision. Um, and at the same time, I started doing my own builds along with the ones that I'd done with Rich, which was great. Now, early 2022, so this was 4 years ago, a little over 4 years ago, I was flying home from a trip to Florida, and I land for a layover. I think it was in Atlanta, and my phone is just blowing up as soon as I get service. And so clearly something is wrong. And, there's calls from Rich and everyone I know that does business there. And with no warning, the Metro District had shut down all new water taps. And so I have like 15 lots in process. Many of them I've already bought, planning to build on several of them. Some of them are just under contract to buy, some under contract to sell, and it's just frozen just like that with no guidance. We don't know, are these worthless? Are they totally out of water? Is this ever going to reopen? We didn't know anything, so that wasn't a fun day. And I remember I got home and I had just come from Florida, so I said screw it and just started marketing to Florida immediately to try and get something else going. So started to get leads and deals there. And over the course of the next several months, thankfully, we got some information and eventually water taps did open back up in Pueblo West. However, it was at a reduced price, or excuse me, an increased price. So that reduced land prices. And then this was right when I think it opened in like May. So they closed in late January, opened in May, and that coincided with rates being hiked aggressively. So that market has been very slow since then. I have not really flipped lots there now in the last four-ish years. A few here and there we've gotten, but mostly I've just built there when it makes sense. So that's what took me to Florida. And started to get deals down there and figure out the market down there. Started in Southwest Florida, did a ton of deals in Lehigh Acres, and then later that year migrated up into North Carolina. And that was super profitable for a while. There was a period of time where North Carolina, the response rates I was getting and how easy it was to get deals up there was just ridiculous. In 22, 23, and even into early 24. And then it's slowly morphed. I mean, in hindsight, I took too long to move up, I think, in deal size. I think I took too much money out of the business and just immediately put it into more properties when it probably would have been better served to keep in the business, scale the marketing, especially when things were really, really working, and do more deals before doing that. So those are some mistakes in hindsight. But today, my focus has not totally shifted. I mean, I'm still doing some of the small infill lots, but that market has gotten a lot more efficient. So margins are smaller. It's much harder to get them. And at the same time, the larger acreage is still pretty dang inefficient because there just aren't a lot of players in the space. So most of what I'm focused on today is large acreage. Still have continued to do some builds, but getting into to putting mobile homes on a large portion of these. We can talk about that because that's in process right now. But most of what we're targeting is large acreage.
Yeah. So yeah, the migrant. So I want to zoom back because I'm really pumped to talk about what you are doing now. But the migratory patterns of land investors has always been funny to me. When we got into the space a long time ago, before it was necessarily as efficient as it is now,
Hmm.
and there were just less land investors. Yeah, we
Hmm.
started doing it in 2014, so there just weren't as many, right? But over time the pressure increased with more and more land investors, and we saw that. And we always had this idea that we're going to kind of go into a new market, and then we're going to master a new market, but we never really had much rhyme or reason to entering a new market. And
Hmm.
it sounded a lot like what you're talking about. I mean, we did look at price point first, but we weren't looking at anything else. It was almost like you described. You were in Florida on a trip, and then you got back from Florida, something changed, and you're like, okay, I guess Florida. Like, it's
Hmm.
almost the equivalent of throwing a dart at a map, right? But then, like, how did you then migrate up to North Carolina? Was that just because it was over on the East Coast, or was there something pointing you towards North Carolina?
Florida, there was a little more involved in that. Again, my older buddy had pointed out Lehigh Acres to me as another old subdivision that had formerly failed and was now growing. And so that was already in the back of my mind. I think I was in Punta Gorda at the time, so not too far from there. So it wasn't totally random, but still, there's plenty of subdivisions, so it wasn't that special. But North Carolina, I remember that vividly. So I'd been marketing in Florida. We were doing deals in Florida, still had some in Colorado. And my norms around mail and what a response rate should be in 21 and early 22 were so absurd now it's laughable. Like you should get a deal with 100 mailers, obviously, right? 100 mailers. And so that's what I thought was normal because that's what was happening in Colorado for a while. And so I'm like, man, I sent 2,000 mailers to Florida and only got two deals. Like this sucks. So anyways, not knowing what I had and how easy it still was, I went and I was just looking for, all right, in the growing areas, what appears to have a lot of sales. And I knew the whole Southeast was growing. And so I remember just scrolling around on Zillow and I found Brunswick County. And now that's just like these other places we're talking about, super saturated, very difficult to get deals. But nonetheless, at the time, it was not. I remember mailing a few thousand there, and the response rate I got was just absurd. I remember that distinctly because my acquisition manager needed help. He couldn't handle them all. I had to help him. So that's how I got to North Carolina. That was just looking in the busy areas, looking at where there were a lot of yellow dots on Zillow and looking around and sending some mail.
Makes sense. Okay. Yeah. So North Carolina, you could just see that there was a lot of activity going on there, and the
Yep.
price point was right. So, another thing you said that I wanted to key in on is you felt like you took too long. There are two things actually. One is you took too long to go up in price point. So you kind of
Mhm.
stayed lower on the price ladder, and and maybe you were mentioning acreage size there as well. And then the other thing is taking too much money out of the business and putting it into the rental properties. So
Mhm.
let's just dive into each one of those. Like what do you think you would have changed about both of those, and why?
Yeah, I have struggled with being overly financially conservative the whole time I've been in business, and that's really constrained me. So early on, I was getting just obscene returns on ad spend, and I should have doubled, tripled, quadrupled down, and I didn't because I don't know, I just thought of it as an expense. I didn't have it clearly in my head. No, this is an investment. You're getting a return on this. And I was also afraid of the debt I was taking on to do the deals, especially early on when it was pretty much all other people's or mostly other people's money. So a fear ultimately is what stopped me, which again in hindsight it is so ridiculous. And sure, hindsight's 2020, but I was selling these lots like immediately, so it should have been a little more obvious. And so I think it was that same thing that stopped me from moving up in price point. Is just taking on larger loans to close deals, and probably just a comfortability with what was working. And there were times that I just tried and failed, but probably didn't try hard enough or put enough marketing spend towards it, given how much greater the margins could have been, or are doing them now. I can say are, not could have been. So, yeah, I think it was a combination of fear around the money side of it, and then also just not sending enough marketing material to that sort of product, you know, and not taking into account the greater margins and ability to spend more and still be worthwhile.
Gotcha. Okay. And then the other part about taking too much money out
Oh,
and putting it
yeah.
into rentals. What is the form? Because that is a really good strategy, right? Like take your retained
Mhm.
earnings, dump it into a rental property, get a tax write off. Because if you're just flipping land, you're basically having a huge tax burden, right? So, but what is the right formula? Like, what is it that made you feel like you took too much money out of land to put into these rental properties?
I don't have a clear answer for you on what the right formula is, but I would say, and yeah, the cost sags have saved me a lot of money. Plus, I'm getting a good return. But I think when I specifically 21, 23, late 22 into 23 and 24 were so hot and things were selling so quickly. That should have been a sign. Okay, hey, double down on your marketing, drive as many of these through the funnel, multiply the capitals fast as you can, as opposed to my first instinct when I make a big chunk of money is, all right, what building can I put this in? What building can I put this in? So I think the balance is somewhere in the middle, and it's again just what what's the word, first learned on, which was bigger pockets, all these books and podcasts about buying units, buying rental properties, and so that was so ingrained in my head. I didn't understand. Hey, you have a ridiculous, uh, what's the word I'm looking for? Well, return on ad spend, right? The return on ad spend was just phenomenal for quite a while and so fast too. I was short sighted. I think I could have multiplied those dollars more before taking them out and putting them into buildings.
Yeah, yeah. How old are you right now?
I turn 30 next month.
Yeah, you're still in your 20s. I think you should be less hard on yourself. I
Oh,
mean, Michael and I are a lot older, and we've made way more mistakes than you. So I think you're
I
doing
mean, we
great
could
out
talk
here.
about mistakes, man. I could go all day talking about mistakes and problems, but yeah, I mean, I appreciate it, but I think that I'm sure you can relate to always thinking that you can do better. So
Yeah, but I do think that that's a really important piece for people to hear, right? Where you it is a fine line. It is a tough balancing act where you want to be able to continue to deploy capital into growth, but you also need to be disciplined and make sure that you can, take a few chips off the table when necessary, have some reserves in place, and just have a little bit more of a balanced strategy. And it's for Chris and I, it's always been, kind of this pendulum swing where, we kind of push too far one way and then we're like, oh man, we really need to pull back and move it over into this bucket, and then we pull it too far over there, and then it's like, gosh, man, here we are again. Let's push it back over here, and you try and find that equilibrium, and it's the goalposts are always moving. But the piece that I take away and I really commend you for is that you are really focused on that and creating a little bit more of a structured framework as to how you want to approach that, right? Just some general principles, and you want to make sure that your goals are to build out this revenue stream that's relatively passive, and it's going to
Mhm.
continue to appreciate. And you've got some cost seg and tax advantage piece over there, but then you've got this other monetization piece that you can drive a lot of revenue really quickly. And so um, I think that that's a really cool piece for people to hear.
Yeah, I'm glad you said that because one thing that I've seen that has taken some people out is you guys both know how bipolar this business can be, right? You'll have a good spring, you'll sell a ton of land, you'll get a bunch of capital back, you'll get profits back, and you'll have a few slow months. And so being disciplined with your money is so important where when you feel like you're on top of the world and you make 100 grand in a month, you don't go do something stupid and waste it. And because you're going to have slow months, it just happens. You're going to have months, especially if you have the buildings too, where you have a bunch of capex problems, you have tenant turnover, you spend all your normal marketing dollars in the land business, you didn't sell or sold very little. Like these things happen, right? And so you have to be ready and have to be disciplined and keep some form of large reserves. And I've probably been overly conservative there most of the last 8 years, but I'd rather that than having gone out of business. And so the way that I think about it, and I have to reevaluate, now like I said, I turned 30 in a month. I uh I told myself when I started this, I'm like, okay, if I invest all the money I can through my 20s, I remember hearing a financial advisor say that if you compound it properly and you reinvest it, the money you invest in your 20s is worth, on average, right, more than all the rest of the money you invest subsequent decades of your life because of the way compounding works. So I'm like, all right, I'm going to funnel everything I can just into investments. And I mean, I haven't been perfect. I've had some fun, taking some trips, but I mean, I still live like I'm pretty broke. So I think that that's probably what good advice for most people, unless you're to that point where it's like, okay, I have a $10 million net worth and it doesn't really matter anymore. Then okay, whatever, or whatever that number is for you. If you live in Ohio, I guess you need like 500 grand, but um, remaining pretty stoic and not stoic. That's not the word. Just very conservative in your personal finances helps quite a bit.
Yeah.
Yeah, I'd agree with that. And I there is a huge difference between the cost of living in Ohio and California.
Yeah.
So take that into account. Not to mention the taxes,
Yeah.
but we won't go down that road right now.
Yeah.
As far as deal generation goes, how you're buying property, and then and now, I don't know if there's been a big difference for you, but how are you going about getting properties, getting seller leads to talk to you and acquire the land?
Mail and cold calling have been the foundation pretty much the whole time. I started with mail. I added in cold calling in 2021 and have not stopped since. Those two work. We hammer everybody in the areas we want to target with both methods. The biggest change or addition, I shouldn't say change, recently is adding on market deals as I've moved into these much larger pieces of land, much higher price points. It gets really inefficient again, right? Just like it reminds me of the days of being able to flip info lots very easily. It's still kind of like that at big price points for rural land. We have bought in the last year, if I include the one we closed on last summer and the ones we're closing on right now and the one we closed last week, we'll have bought like almost 2,000 acres on the market. Um,
Wow.
just listed through realtors. And so it's still a funnel. You still have to make offers lower than ask. It still takes a lot of time and headache, and you have to sift through a ton of crap to get to the properties that are worth offering on. But you can get great deals on the market. We bought 640 acres last summer at what 670 an acre, I think it was 660 an acre, and we're selling that at 1,500 to 1,700 an acre. So that's going great. We have one we're closing in like 3 weeks, 440 acres, much closer to town. We're buying it at just shy of 2K an acre, like 1950 an acre. And looks like I have a first buyer for one at, what would that be? Like 3,500 an acre or 4K an acre. So these are on market deals, and it's just a matter of, what is one of my buddies always says, you buy the farm and you sell the pasture, buy by a pound, sell by the ounce. So there's usually a price difference between wholesale and retail, and that's applicable in land as well.
Yeah, so I think that kind of like segues into a little bit of where you're going now, right? Where you're talking about some of these bigger acreage deals and you're buying them. Are they already subdivided? Are you doing some subdivision? Can you talk a little bit more about the direction that you guys have taken recently?
Yeah, so we're doing the subdividing ourselves. That's the big value add. Sometimes that involves improvement, sometimes not. Just depends on the county and the scenario. But I mean, one of my things that I'm working on is I have my own pipeline in our CRM now of these big properties that we're offering on, following if maybe they're high but they have great road frontage, and we want to offer on if they sit a bit, and then executing those. And so far so good. It's not a new model. It just takes more capital, and they're much longer time horizon deals.
And on those ones, are you going all on market, or are you using the strategies that you do on the smaller deals to get them as well?
Both, but we've actually bought more on the market than direct to seller. Sometimes as a more sophisticated seller. I mean, I don't want to say all the time, but yeah, and sometimes we buy great deals off market from sophisticated people. It just depends on the scenario. But I haven't been able to get as many of those via direct to seller marketing, but we've gotten some. And one I want to tell you guys about, just because it so accurately illustrates the importance of marketing consistently. My buddy had a lot under contract. It was 160 acres in Colorado like a year ago, right now, at 450. And I remember talking to him about it, and eventually he canceled. He was trying to just wholesale it. He's like, I think there's a decent margin here, but I'm not that sure. I'm not sure how long it's going to take. Canceled. Well, this friend of mine does a lot of business in the same area, and so I called him about a month ago when we had this lead, and I didn't know it was actually that same property that he had canceled a year ago, and I have it under contract at 330. And so the difference is the seller wasn't ready a year ago. Now that he's had his time wasted by several people, he's ready. He's done. He wants to sell. And so we have it 120K lower because we happened to target him and talk to him when he was really ready to take an offer that he needed to take. And at 330 plus with the more recent comps, I'm very comfortable with the deal. There's really no way to lose. And so point being, whether it's following properties listed on market and checking in every few months if they're too high, or just making sure you're relentless with your direct to seller marketing. It's not about, are there deals here? There's always deals. It's just, when are these people going to be ready to sell? And it's like, I think too many land people have it in their head, like, okay, I marketed one time to everybody, I got X response, so that's it. And no, that person who said they wanted 120% of market value last month, something might change in their life, and they might change, get real, right? That person that you just bought from for a great deal, they might have not offered it at a great deal 2 months prior to that. And so you just need to stay in front of almost everyone all the time. And when people are really nasty or really combative or whatever, then we take those people off of our list. But just because somebody says an outrageous number or that they're not ready, it doesn't mean that something won't change in a year. So you've just, I mean, it's just like any business, but for some reason, I think it's pitched as if it's different and talked about as if it's different. You know, any any company just wants to be in their client's mind when they're ready to use them, and it's the same thing. And most people aren't going to be ready to use us most of the time, so you just have to keep doing it.
Yeah, and so it sounds like you've been in a few different markets rather than sort of like flying all over the country and starting in a new market every month and testing mail out there and then just abandoning it. Like, would you say that going deeper in a market is valuable?
Yeah, absolutely. Because once you really know the market too, you can rise above your competition a lot of times, especially if you're locally branded. That serves us well in Colorado. We're not marketing to Pueblo West because the land prices are just terrible there right now. But if we were, like, just the confidence that comes from knowing a place really well and knowing the pitfalls. Oh my gosh, I had this guy call me, and it was like a friend of a friend earlier this year, late last year, about this lot. And it was so funny because as soon as he said the size, I knew exactly what lot it was, where it was, everything. And he's talking about how he's going to develop it and all this opportunity. And I'm like, no, 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 no. I know that lot. It's a lemon. It sits on the hill. There's no water lines up. Like, it's just a piece of crap. Maybe some idealistic homeowner that loves the view, because it does have a great view, might waste their money and buy it. And you could develop it. It would be one house. And knowing that sort of thing is really useful because there's usually some pitfalls like that in every market where, there's certain streets there that randomly don't have water lines. There's just a few little things like that. There's a couple areas with horrible shale, and I see wholesalers and flippers come into new places all the time and waste so much time. I had another person call me for another lot in Pueblo West, and they're like, "Oh, you can rezone this to," I forget what he said, but he was just wrong. You can't. There's no water for it. There's no, and so when you're new somewhere, you waste a lot of time because you don't know what you don't know yet. And you have to figure that out. So once you've been somewhere for a while and you know it's so much more efficient. You can speak more confidently. You can make offers quicker. You can reference all the other properties you bought, bills you've done, and that just helps build legitimacy with the sellers. And then ideally, you have a portfolio of reviews online for your company referencing the areas and the properties, and then those sellers see that, and then it's a feedback loop where that helps you even further.
Love that. And you also get to build a team, an external team of
Yeah.
title companies, soil scientists, and surveyors, and all the folks that you need. And that whole, oh man, I have to go find a realtor, and I've never done a deal here, and now I'm going to start with the yellow pages, or really just dig
Mhm.
through Zillow listings and find a realtor and call them. And I mean, that's so exhausting. And you may or may not, you have to test those people and see if they're actually going to be good vendors for you.
Yep, 100%. That's a big part of it too. And just once you have a rapport with people, the willingness of realtors to go out and check lots for you, do you favors. The If you're in an attorney state, once you've done a bunch of deals with an escrow attorney, you get so much free legal advice. It can be so helpful. So there's perks that come with doing business with the same people in the same places over and over and over again.
Yeah, it's funny. We had kind of adopted that too, where you go, an inch wide and a mile deep, and I think that that kind of speaks to what you were talking about earlier, where you Pueblo West, every one of those streets inside and out, right? And I can imagine that somebody comes to you with a deal, and in a matter of a few seconds, you're able to just quickly do that valuation in your mind and say, okay, like here, this, if we're talking at this price point, then it's worth my time, and if we're not, then I'm going to just move on. And the amount of time and
Yeah.
energy that you're saving, it's just
Yeah.
truly a compounding effect.
Yeah. 100%. Yeah. That's a good point.
So let's talk about where you are today and sort of where you're going. I know you've got a lot of new exciting things going on with your business and with your life, really. But yeah, well, fill us in on kind of that direction.
Sure. So as I have said, I have been consistently building for years, onesie twosies, because that takes a good amount of capital to build, and then all the funds going into land. I've never done that at any sort of scale, and I'm going to kind of go all over the place, but you'll see that I'm painting the picture to show how I arrived at this. And at the same time, most of the land that I'm selling, the first question everybody asks are there restrictions? Can I put a mobile home here? Can I put my manufactured house here? Can I put it on a permanent foundation? And then at the same time, housing's super unaffordable in most parts of the country. I don't think it's the worst it's ever been. I think the 80s were worse, but it's pretty high up there. So that's a problem for everybody. And affordability is driving the market. And at the same time, I, about a year and a half ago, got connected with an investor who has a similar business to mine, but like 100x, like quite literally 100x. And he has a number of stick built home companies and a big land company. And so we've been doing deals together. A lot of these subdivides I'm doing with him, learning from him, help with the capital, et cetera. And we've reached the point where we're going to start putting the manufactured homes on our lots. And the way that this came about, we got that 440 acres I was telling you guys about. The southern section of that is perfect to split into 8 and do 8 homes. And I was thinking modular, right? So I started researching and researching. I look at these comps. There's comps right down the street. I'm like, great. Look, these modular homes are selling in the mid fives, really simple. And then I realized, wait, these are manufactured homes. And so I dig into it. I realized these are HUD homes or mobile homes, but they're put on permanent foundations. So they're considered real estate. They're financeable. And at the same time, I'm talking to my investor that I keep referencing, and he's like, yeah, we tried to start this manufactured home company a few years ago. We just didn't have the right person. Like, oh, that's interesting. And then at the same time, we're selling all these lots where people are putting mobile homes on them. And long story short, this has kind of come to a head of we are getting the licenses in Colorado and Oklahoma to do these on the lots that we own together, do some specs on the existing lots that his company has, then some of the subdivisions, and then to create a retail location that will allow people to go see them in person before we then put in a home for them, because between my business and his business, there's a large sales funnel of people buying land who want to do mobile homes. So we're creating that, right, in conjunction with what we're doing. I think this is kind of the value add I've been looking for, because I don't like just the arbitrage, just the pawn shop for land model. It's great when it works, and it has worked for years, and I think it will continue to work, but I really want to have more of a moat around my business. I want to have a way to make money even when I'm buying at market value beyond just subdividing. Sometimes subdividing works, but I've wanted a better scalable pairing with the land, and I think this is it. So we are in process. We should have the Oklahoma license here in the next week or two. We've got a big retail lot right on the highway. We're moving forward. We have a bunch of lots picked out, and this was really satisfying. So that pre-sale I told you about on the 440 acres, this satisfying but also frustrating. Well, the guy goes, you know what? Actually, I'm not going to need you guys to offer owner financing on this. Clayton Homes is going to call you. I'm doing a house here, and they're just doing the whole thing for me. I'm like, well, duh. See, there's proof that the demand is there for this product at this location. Like, we need to do this now. So that's what I'm working on pretty intensely right now, is to pair the ability to quickly put manufactured homes on a portion of our lots here and elsewhere, and add that to the business, because I think that's a huge opportunity that's not going to stop.
Yeah, and what are some of the price points that you're looking at in as you subdivide these, and if you could break it out like for the land, and then what you think that price point will be for a finished product.
Sure. So let me start with Colorado, because that's where I know the price is the best. I'm almost complete on my cost breakdown. I've got just about everything put together. The comps we're seeing right down the street are mid fives, like between 530 and 580. I'm seeing, and those are in the last 6 months. A bunch of them have sold, so that's really good data. And looking at, we've got about 75 for the price per square foot on the actual home itself, and that includes delivery. And with all the other costs, I think we're going to be all in around the 400 mark on the home itself. And then if we can, I'm working on figuring out what I want to do. As I told you guys beforehand, I think I'm going to move back to Colorado and kind of go all in on this. And so I might just get a real estate license to save us the commissions. Unsure yet, but with realtor fees and bank costs, we're hoping to clear 80 to 100 per house on the Colorado ones. And then Oklahoma is much lower price point where we're looking. Actually, wait, let me backtrack, because I didn't separate the land from the home itself. I kind of went all over the place there. The lots that we're starting with, we're in them just under 2,000 an acre, and the 35-acre lots, approximately. So survey isn't done yet, but so we're expecting 70-ish to be our basis on the land. And then the home is 75 a foot. So we're doing 2,000-ish square foot, so 150, and then you got to do the well, and a well in Colorado is pretty expensive. Septic, site prep. We're doing a big garage barn thing, because that's what a lot of the comps are doing. That's what people want, and that's got to have a concrete floor, so that's going to be like 35 or 40 grand. So I'm just pulling from memory. I don't have the whole spreadsheet in front of me, but we're looking to be in around 400-ish before bank fees and realtor commissions and other closing costs. Switch to Oklahoma, and prices are very, very low. So we've picked out 4 lots that my partner already has, and we're working on putting together floor plans and costs on that. Now, that's actually why I have to get off here at 12:45, is because I have a call with the supplier down there. But those are going to be much, much lower. I think it's going to be more like be all in at 150 and sell at 220. So I expect smaller margins, but quick and easier sales with less cash needed.
Very cool. Very cool. And how many total units are you looking at, or how many lots out of that? Just without me having to do the quick math, your 35-acre lot in the Colorado deal, and the total was
Yeah,
460. Is that right?
we're going to do 8 so we should get 12 lots out of the 440. And then 8 of those we're planning to put homes on. 4 of them we're looking to just sell the land. And then we're picking out 4 lots, or have picked out 4 lots in Oklahoma that we're going to do immediately. And really the big picture is the land sales company. So my partner on this, like I said, he has a much larger business, and they sold 40 lots last month. It was like 35 the month before. And so almost all those people are going to use that land for manufactured houses. And so the real opportunity in my mind, the reason why this is such a no-brainer and not me getting distracted is because from day one, all those people are going to be told by the salespeople, hey, we have a sister company that can do the home for you. Call them. Here's our location. And so it's a built-in, it's almost a vertical integration. It would be like if you had a big sales brokerage and you decided to start a loan company. Well, okay, you have built-in referrals day one. It's the same idea. And so that I see as the real opportunity to scale this far beyond just the specs we're talking about.
Yeah.
I've got a zillion questions about this, and we're
Yeah.
gonna have to do like a part two, especially as you get further down the road on this venture. It's funny though, like one of the hardest things that I would think would be to figure out where are you going to put the retail location, because with land you get buyers coming from all over the place. It's not that easy to target where your buyer is going to come for the parcel that you just put up on online for sale.
Hmm.
Sometimes you'll be selling a property down in Lehigh Acres and the buyer is coming from New York, and sometimes they're
Yeah.
coming from Florida. And so, with a house, you actually have a use for it. Not with selling vacant land. Sometimes people are just buying it for a dream. Sometimes they're buying it for the future. Sometimes it's recreational. It's not as easy to key in on what they're going to use it for.
Hmm.
And so with a house, they're going to go live in it, or they're going to buy it and turn it into a rental. So how do you select where to put that retail location for the original home? And or are you just going to say, all right, the first lot that we develop a home on, that is the kind of the showroom house?
No, so we have, or he has, and we're using it a lot right off the highway in Oklahoma City. So that's going to
Okay.
be the retail site. And then the specs will help because they'll be in different places that maybe it'll be more convenient for people to walk through. But yeah, the location in Oklahoma City is pretty centralized to where most of their Oklahoma land is. And
Mhm.
so pretty much everyone should be able to make it there. Now, in Colorado, if things go at all like we think they will, we're thinking a couple years down the road, it might be worth putting a retail location there, but that's totally in the future and to be determined. So yeah, it's just what is already available as far as location in Oklahoma.
I see. I see. Okay. So for Colorado, that makes a lot of sense.
Hmm.
And with the show, like the retail location in Oklahoma that you're going to do, are you going to have more than one model on the site, like three or
We're
four? Or are you
thinking
just going to have
six.
one there? What's that?
Six is what we were thinking.
Oh, six models.
Hmm.
Okay. Gotcha.
Yep.
Very interesting. You have a background that like a lot of people don't have, that they're entering into the land space with. You've got a
Hmm.
background that, you've been close to the land the entire time. You were doing landscaping at one point, and then
Yeah.
you were
Yeah.
getting into the you were very close to the land there. But
Hmm.
then you were actually getting in and building a home. Like a lot of folks that are coming into the land space are coming from another space that might be, I mean, maybe they're just graduating college with no experience, or maybe they're coming out of corporate America, or maybe they're coming from e-commerce, but they're not used to the coming out of the ground portion of it. Like they're just
Hmm.
looking at land as it could be a widget from China, and
Yeah.
they just need to buy it and sell it. And it's kind of like you described. I haven't heard that before, but yeah, the pawn shop for land. It makes sense.
Hmm.
And there's not a lot of value that is being added other than bringing the property to market that wouldn't maybe otherwise be on the market, right? Or if
Hmm.
they offer seller financing when they sell it, they make it more affordable for the end buyer. But and then some people do the next step where they're going to subdivide the property, and that's going to add some value, and that makes sense, buying the keg and selling the individual beers. And then there's other things you can do by adding a driveway cut, or adding a little building pad, or putting a fence up, or whatever the case may be. But I love where you are going. Well, you and your partner are going with this, where you're pretty much going fully integrated,
Yeah.
and there's just so much synergy there between just land and, okay, also we have a full end use if you want it. We can build you a home and you can go live in it or rent it out.
Yeah. Yeah, 100%. And just the infrastructure that they already have there is so powerful because I don't have to go find new subs. I just call their home building companies and they send me all the subs. And for the so there's just it's too good to turn down. And I think it's a huge opportunity, and it's still a very inefficient space that people can't just jump into because there's courses online. Maybe onesie twosies. I know there are courses teaching people to do this at a small level, but you know, to have the ability to go do 10 or 20 or 50, you need a lot of capital behind you. And so again, I see it as a space with a much larger moat around it, you know?
Well, so much of this is synchronicity, and Mike and I talk about this all the time, where someone comes into your life and changes the trajectory. And if you didn't have this partner that you guys are, building this business with, I mean, would you be going down this same road, do you think, or would you be going down it just at a lot slower of a pace? I mean, like, or did you already have this in mind,
I've looked into and run the numbers on modular homes several times in Colorado. I have some friends who've done it. Again, I've been stick building for a long time, but no, I definitely would not be not at even close to the scale we're talking about, because we're talking about many millions of dollars, and so I wouldn't have been able to effectively get into these larger deals either because these are not small purchases, and so yeah, finding good people to work with, finding someone that is ahead of you, but maybe you know something they don't, or they're tired and have the money, but they don't have the hustle anymore, or whatever that might be, is key. And also, just I think not getting cocky. Especially you're doing well, you're making money at your level, but there's already always much bigger fish, and so not getting cocky and being open to learning from them, I think, is really really important as well.
Yeah, one of the other pieces I just want to kind of move back to real quick. What I love about it is you guys are also taking the approach in you can have a couple of different exit strategies, right? Where you can just sell a lot. You can add the value improvement there. But if the market turns, if things change, you have options. And I think for people that are coming into the space, it's really important to try and figure out how you can build out alternative exit strategies depending on certain scenarios. And that could be just as simple as offering seller financing and selling it cash and selling it wholesale. It could then be expanding that more, right, to where you are doing some subdivision and you have the opportunity to sell the individual lots, or you could just sell the entire completed subdivision. So I love how you've built your business and you've continued to add opportunities to exit at different avenues, different ways, and it's just continuing to compound there as well. So, well done, man.
Thanks. Yeah, and just as you're talking, one of the thing that came to mind is you mentioned the experience building, and that's been useful because now I'll build rental properties for myself, and then the cost seg is great. You have a brand new home. Early on, I was talking about how it's not passive, but it can be pretty passive, and so when you build new construction in a nice area, you get 700 plus tenants with 700 plus credit scores, significant income. That's a whole different business than Class C multifamily. I mean, I had a tenant in one of the new buildings who they moved in 24, and I guess my property manager messed up the lease and put that we were responsible for landscaping, which was not supposed to be the case. And so they had reached out. They're like, "Hey, are you guys gonna get the landscaping done? The grass is getting long." And so we told them like, "Oh shoot, that was a mistake. That was supposed to be on you, but our bad. So we'll cover it." And they just go, "Nah, don't worry about it. We'll just do it." And like that, it doesn't have to be this awful combative adversarial dynamic with tenants. They can actually be like your customers who are happy with what they're getting. Number one, you have to be a good operator and not be a piece of shit and take care of them. But number two, part of that is having a nice building and a nice area. Because I have a couple friends, two in particular, I'm thinking about because they're both about 10 years older than me. They're both really wealthy. They've done very well, but I don't envy their business. They're in Class C multifamily, maybe up to B, and it's a nasty business. I don't want anything to do with that personally, and so building nice new buildings in at least B or better areas is just a whole different business. And to be clear, you could still get terrible tenants if you don't have your screening process in place, but if they have a 700 or better credit score, 3 plus income to rent ratio, and they have good references from their boss and their landlord, it's really hard to go wrong.
So, no, I know we're coming up on time and you've got to get on a call here in 10 minutes or so, but two more questions for you.
Sure.
So, just for fun, what would you say? It doesn't need to be the biggest, but what's one of the biggest mistakes that you have made if you were to look back over your 8 years in land investing? Like, what are one of those or a couple of those like fun mistakes to look back on and go, like, okay, shouldn't have done
Yeah.
that?
A lot of things come to mind, but I'd say the biggest kind of goes along with what I was saying earlier, not doubling down when things were working, both with capital and effort, thinking that the current situation would go on forever and it would be just that easy forever. And it's like, oh my gosh, man, if I could go back to 2021, or, well, 20, even before that, even before the pandemic, it was still easy. Like the market wasn't hot, but it was still so easy on the front end. Basically, 2019 through 2024, and I'm sure before that too, I would have tripled down. I could be so much further, not just in the capital, but also in my effort, my hiring, my own effort. I wouldn't have gotten out of acquisition so soon. It was working. I'm good at it. I would have hired someone and kept doing it myself and just marketed more. So that's probably my biggest mistake, was just not doubling down sooner. And then the other thing that I think is sometimes something's not going to work, whether it's an employee, a property manager. I mean, this is beyond business. Sometimes I think people do this with relationships, and you procrastinate dealing with it. Well, maybe it'll work, or it's not that bad, or I think it could improve, and it doesn't. And you don't deal with it, and you need to deal with it. And I've made that mistake with contractors. Yeah, mostly. I think more than anything is where I've made that mistake. A couple employees. So that's another big thing, is when a lot of times this isn't going to work. I need to cut this off, and you let it go too long because it's uncomfortable and you don't want to do it. And so I'm thinking of an employer or two, and a contractor that I should have gotten away from sooner, and then it cost me time and money. So that one's high on the list too.
Oh yeah, yeah, I can see in Mike's face too. I mean, you're making our skin crawl here. This is ringing up. This is hitting too close to home.
Yeah. Yeah.
But okay, cool. And then the last question for you really is, this space is always changing, and the name of the show is Modern Land Investor, because it's always changing, and you've got to be up with the times. Mike and we were head down for years, not paying any attention to what was going on outside of our little business, and that was a mistake, right? And so there was often we should have pivoted several times, over the years, and we were always, I feel like, one step behind. So, just in your mind, like, where's the market now in the land investing world, and where do you think it's going? Like, what are some of the big shifts that you feel like are taking place right now that people should be aware of?
Yeah, I love this question, because this is so clear to me, where there's this big divergence between the legacy companies that maybe have been around for 20 plus years or several generations, who are really profitable and they can buy big pieces. And then the people on the social media hustle side of things, who are probably much better with tech surrounding the business, data, direct to seller marketing, getting great deals. And I don't think many people have merged the two things. And what I'm finding is the old school is much better on the capital side. They're getting bank loans at 6% with little origination on these big tracts of land. They sell on terms. They have the connections with the brokers, where they get the best off market deals for big ranches and farms as they're selling, legacy properties that are finally coming to market. And then this side again, they've well, I mean, I'm going back and forth too much, but these old companies, they don't know how to go get these killer deals, 40 cents on the dollar, 30 cents on the dollar. They don't know how to use AI and tech. And then the new school does, but they don't have the access to capital. They don't have the broker relationships. They haven't taken down these big projects. And so I see the big opportunity of taking the best of both worlds. And that's what I'm trying to do right now with the guy I'm working with and the deals we're doing, because I see what they've built and it's incredible, but there are opportunities for improvement. I mean, they're barely even marketing direct to seller, and they buy thousands and thousands of acres. It's crazy. And I'm like, dude, we need to be doing this. Like, I'll just help you guys, like, just to help our own biz, what we're doing. But the debt they get, their debt cost is nothing compared to what most land investors pay. They get phenomenal deals. They get awesome leverage. I mean, they'll get deals financed by these banks at 100%, because their balance sheet is so strong. They have such a good relationship, and so they're able to leverage so much more effectively, so that they can take down these 1,000-acre farms where they're not going to be profitable for a few years, because it's such a long cycle to split it up. But that's okay, because, well, they're paying 6% interest, and they've got a huge note portfolio, and they're putting very little cash into it. And so I see, I'm ranting obviously, but that's because I'm excited, because I believe what I'm saying. I think the opportunity is to take what many of us in the that came up kind of on the social media land coaching world, to take the principles that are good there and combine it with the old school money sources, these big deals, slower. Maybe you're not going to make money in 90 days, but you'll make a lot of money in 9 months or a year and a half. And meshing those two things, I think that's the big opportunity. And for me, part of that is also being able to build or put these homes on a portion of the lots so that we have a value add and an additional exit strategy.
That's the pod.
Love that.
Thanks, Dan.
Yeah.
That was awesome, man. You just
Yeah.
got us totally amped.
Okay. Well, thanks for having me. We'll have to do this again after we get things up and running, and see how it's going. Did I go bankrupt? Did it work out? To be determined.
Yes, round 2 coming. So
Yeah.
we'll load that into the future. But thanks for jumping on, man, and
Yeah.
great to see you. And maybe see you in the water this afternoon, perhaps.
Sounds good. Looking forward to it.
Yeah.
All right.
Thanks, Dan. Appreciate you.
Thanks, Michael.